Welcome to Holistic Accountant Podcast, where we aim to showcase how adopting a holistic approach in accounting and tax maximizes value for clients. Beyond traditional tasks like preparing financial statements and tax returns, a holistic accountant focuses on offering advice that maximizes personal wealth on an after-tax basis. If you enjoy this episode, please consider leaving a rating and sharing it with those who might also benefit. And to ensure you stay updated, subscribe to our weekly email. The link is in the show notes. Okay, today Mena and I have a really exciting topic for you. Business activity statements. And what we wanted to do is do a basic introduction to business activity statements and then really talk about, some of the pitfalls, some of the common mistakes that are made and some of the things that we really need to think about. And even if you've been in business for a long time, you might just think, that's just something the accountant looks after. And of course it is. And I'm not suggesting you need to invent things to worry about or spend time on. But even if you've been in business for a long time, there might be things that related to the ABAS that you don't really understand or aren't aware of. So it's good to sort of revisit what we might think is a relatively basic topic. In terms of business activity statements, of course, they were introduced in the year 2000 when GST was introduced, and it's really just a way of collecting GST revenue, but it's been expanded to also include PAYG instalments. So that's any instalments that you need to make towards your income tax liability during the year, and PAYG withholding tax. Also, if you've got employees, then you've subtracted or deducted withholding tax from salaries. You also pay that through your BAS as well. Some BASs like PAYGW are done monthly or can even sometimes be done weekly, depending on the size of your payroll. And in regards to for GST, typically done quarterly. Again, some taxpayers have to do that monthly. And if you've got a very small business, sometimes you only have to do that annually. So it depends on your lodgement cycles, but it's something to be cognizant of, because we've found sometimes some clients have been surprised where they've passed the threshold and now they need to do it on a weekly basis. It can be a bit of a surprise, but I think it goes back to making sure that you've got a really robust accounting system. And these days, I think of course, we don't want to pay tax more regularly than we need to, and I'm not advocating that, but I think these days we can automate so much that this extra obligation to lodge these returns more regularly isn't that big a deal. I mean, compared to maybe 10 years ago, it's certainly not a bigger deal.
So when do you need to register for GST? And it's a common question that I always get. And basically it's assuming you're a for-profit business, it's if your business turns over $75,000 per annum or $150,000, if you're a not-for-profit. Now, when I say per annum, this doesn't mean a financial year. This actually means a consecutive 365-day rolling period. Now, the mistake that most people make is around them thinking that it's a financial year and then withholding invoices, for example, so they don't breach that $75,000 threshold for a financial year. But because the ATO look at it as a rolling period, you really need to ensure that or monitor that cap so that you don't breach that threshold. Now, if you do breach that threshold, then the GST is charged on the financial year revenue. So you actually need to register within 21 days of exceeding that threshold. ATO really doesn't care if it was accidental. You can't unfortunately blame that you didn't know, or you didn't know your numbers or where you're at in terms of the business. It really needs to be done. And on occasions you can actually backdate the GST registration to make sure that you report the GST in time. So it's really important that you stay on top of your business revenue. If you're using a software, you can break down monthly revenue in that software on your P&L to determine how you're tracking and whether you're actually going to breach that $75,000 threshold. So I know what I've done for some businesses or some clients with us is that we've created a custom P&L in Xero that gives you a rolling 12-month P&L, so that you can actually just go into your Xero file or your QuickBooks file, whatever it is, and just go accounting, run your profit and loss, and see how you're tracking from both a profit perspective and a revenue perspective. Now, if you're under that $75,000 threshold, you can still opt to register voluntarily. Now, this is particularly useful for people such as that may be in the medical field or the allied health field, where the services that they render are actually GST free, but they may incur expenses, such as service fees or rental charges from the clinics that they work out of, that are GST inclusive. So to get those GST credits back, we recommend that those clients actually register, even though they're not getting to that $75,000 threshold, just so they can get the GST credits back on those expenses.
Registering for GST is really simple. You can do it via the business portal or through your accountant. Your accountant can register you for GST on your behalf, of course, or if you want to waste a day, you can call the ATO, but of course that's not really a good option. You need an ABN before you can register for GST, so again you can apply for an ABN through the business portal or through your accountant, and you need to decide whether you want to register on a cash or accruals basis. Most small businesses would go on a cash basis because there's no point paying a GST liability for revenue that you have not yet received, but there might be circumstances where an accruals basis makes a bit more sense for some businesses, but that's just something you need to work through with your holistic accountant.
So in practice, how GST really works is obviously you collect 10% GST on your sales, and then you obviously collect GST paid back on your associated expenses. Now, the difference is what gets is paid or refunded to you every quarter or month or annually, whatever your lodgement cycle is. But what you really need to be wary of is that if you have a fluctuating BAS, so for example, think of a property developer as an example who might incur a lot of construction expenses one quarter, but no expenses the following quarters or minimal expenses the following quarters, it's likely that the ATO would pick that up for a review. Obviously, before they refund a lot of money back to you, they want to make sure that it's all accurate and relevant. So it's really important to check how you're operating in terms of from a GST perspective, whether you're on a cash or accruals basis, when that invoice was raised, if it has been paid, if you are on a cash basis, and what the ATO is really honing in on is a valid invoice from the supplier. So, look at the components of what a valid invoice is. It generally involves company name, date, ABN, addressee with the correct entity name, services rendered, the price, the GST component, and so forth. So it's really important that if you are expecting a large GST refund as a result of, an expense, that you get a valid invoice, and that you pay that invoice in that relevant period if you're on a cash basis, or if you're on an accruals basis, that the date lies within that quarter.
As I said, the other components of a BAS are PAYG Withholding and PAYG Instalments. So PAYG Withholding relates to your payroll, the tax that you've subtracted or deducted from employees' payroll. That's paid typically on a monthly basis, some are paid weekly. Next year, so 1 July 26, the government has announced payday superannuation, which means that you pay the superannuation within a few days of actually paying the salary. I can foresee that, the ATS probably going to change PAYG Withholding as well. May as well just pay all liabilities all at the same time, because there's been cases where businesses have gone into liquidation with, a knowing amount of PAYG Withholding, and that's not good for the ATO because they've got to give the credit to the employee, but they don't actually collect the tax from the business. And the best way to minimise some of those liabilities is just get businesses to pay it all at one time. So watch this space. I imagine that's going to change that. There's no indications yet that they're going to change it, but I bet they will. And the next element is PAYG Instalments. So that's really the instalments that you make during the year that are in respect to the current financial year's tax liability. Now, the ATO works that out based on your most recent tax return. So sometimes people will get a bit of a surprise because their June BAS ends up having a really large PAYG instalment, because what's happened is in May you lodged the previous year's tax return, and if that taxable income was much higher than the prior year, then there's a bit of catch-up tax to pay. So it's good to really understand how these PAYG instalments work. You can vary them from BAS to BAS. So as a way to minimise your unexpected tax liabilities, what your holistic accountant could do is estimate what your tax liability was for that particular quarter and adjust your PAYG instalment appropriately. Particularly that would be useful for people that are experiencing a lower profitability period. You don't want to be paying tax on a profit that you're actually not making. And for people that have rising profits, you don't necessarily have to adjust the PAYG instalment, but sometimes it's a good thing to do just from a cash flow management perspective in terms of, helping you sort of manage that future liability. Depending on your business, there could be other things that you need to lodge with your BAS, like fuel tax credits, these sorts of things, anything specific to businesses, but just just generally it's GST, PAYG Withholding and PAYG Instalments?
I thought it might be beneficial to also highlight some of the common mistakes businesses make with their BAS. And although it's a simple document, a lot of mistakes can sometimes occur and raise unnecessary sort of ATO audits and reviews. So the first one is around failing to register on time after crossing the threshold, which is obviously what we've already touched on. The second one is around claiming GST on ineligible expenses. So think of personal costs or entertainment or costs not relevant to that business activity. We find that it's quite easy, especially if you're using the same business account, to pay for more personal expenses or expenses unrelated to that entity. The bookkeeper can sometimes inadvertently include it as part of the general day-to-day business expenses. So it's really important to sort of monitor these sort of every period and every quarter or month or whenever your lodgement cycle is, when the BAS is prepared, to go through those itemised expenses to ensure that you're actually claiming the right GST credits. The other component is around cash versus accrual methods, and I sort of touched on this before. Know what your reporting cycle is and what you're reporting on. Obviously, accrual expenses, you can claim the GST credits before actually even having paid the invoice, whereas cash is around you can claim the GST only when you have actually paid the invoice. The next mistake commonly made is around not matching BAS figures with your financial reports. Now, this is a really easy pickup for the ATO. It's not something that needs to even be manually checked. So, check that the gross sales per your BASs are equivalent to the gross sales that are being reported in your financial reports. This is something that your accountant should be doing each and every year that they prepare their financial reports. Something that we do in-house just to make sure that there are no unnecessary sort of audits as a result of this. The next one is forgetting to include pay-as-you-go withholding obligations, especially for small businesses and staff. This is becoming less and less of a problem now with the introduction of single-touch payroll, but unfortunately not all clients or businesses are using payroll compliance software or software that gives accurate sort of reporting. So it's really important to cross-check the monthly payroll to that of what you're reporting in your BAS.
The annual reconciliations, Mena, I reckon are really important. You can catch some mistakes even if you've got an expense that has been reclassified. So you thought it was a particular expense in the period when you prepared the BAS, but then if you find the mistake after you've lodged that BAS and reclassify it, so it moves to a different GST category, that's where it can give rise to different outcomes. And it's good to do the reconciliation. I mean, sometimes, you might have overpaid GST, of course, and, having that money in your pocket is better off. To finish off, there's just a couple of very small GST compliance things that businesses need to be aware of. All prices need to be inclusive of GST. So sometimes you see businesses advertise prices and just put plus GST. By law, that's not really correct. You need to advertise the full price. You need to provide a tax invoice, which should include an ABN, the GST amount, separated GST amount, and it must be headed up called tax invoice. And you've got to keep record for 5 years, including receipts and invoices and calculations and so forth. So there you go. Who would have thought that we could talk about the basics of BAS for almost 15 minutes, but we can almost talk about anything, I guess, Mena. So hopefully that gives people a really good insight into an overall understanding of what a BAS looks like. It's a simple thing that we have to prepare on a regular basis, but it's good to understand the intricacies sometimes. Okay, that's it for us for this week. Until next week, bye for now.